The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the German DAX first, and I would really suggest, highly suggest that you take a look at that chart because it is so harmonic that is almost beyond belief. It's even actually started to back off a little bit, but you have perfect swing setups, as you can see by that dark line that's in there. It is just really, it's just ready to go. Hey, that doesn't mean it's going to go, but it's ready to go. So we'll keep a close eye on it. Today, someone posted that Bill Meridian told us that today's the day that I think Apple is up like 77% of the time, and it is starting higher. We're almost in new high ground, but let's take a look at what we're predicting for today. This is the, I'm going to share this with you just to see, that doesn't always work, but sometimes it does. But let's just walk through this, and I wanted to show you what you're looking at here. This is suggesting that sometime between 9:30 and 10:30, we're going to be making a top in Apple, and that's going to be possibly a very, very low-risk trade. Now, the ideal situation is it tops early at around right at the open and then backs off for the next hour, making lower highs. If you see that, that tells you that you got a really strong possibility that, Apple could, reverse and, actually close down on the day. Now, don't pay attention to the price line, folks. This is all related to time. It has nothing to do with price. That's the main thing that you want to keep in mind. Also, we've had something big happen yesterday, and it's very, very important if you trade Treasury bonds. Let's just walk through this here. Here's where we were. We'll get up and see. You'll see we recommending that short up there at that 183 level. Yesterday's low down there at 178 and change was a 382 retracement, just absolutely spot on. And I want to walk through this to you to show you why this is very important. Here's what we were looking at when we were watching that number come up. Over the last 5 days, this has dropped 5 handles. You can see the 1.27 expansion up there at 183.07. You can see the 3 drive to a bottom pattern at 178.06. And folks, that is the exact 382 retracement. And you can see here we've had a little bit of a rally. We got up to 79 and change so far. Now, if we go below that, that's going to be quite negative. But right now, after being down 5 handles in 5 days, that it means the market is very, very oversold. So it should get a little bit of a rally. Now, remember this chart right here that you're looking at, this 3 drives to a bottom, because as this, one of the things that I do well, folks, I really know short-term trading. And I pride myself with that. But take a look at the Treasury bonds. If we blow this up and let you see what was happening exactly when that 78.08 level was hit. You see you had another beautiful butterfly right at the bottom, a double ABCD, a large one and a small one right there. And look what happened. It rallied all the way up to 79.11. That was down 1,000, up 1,000 in one day. And look at the bottoms here. You see how you have the higher bottoms at 78.12 and another one at 78.18 at a 61% retracement. Those are the kind of things that you can do when you're intraday trading. Now, for the 24/7 folks, what I'm going to do starting on Monday is I usually send 1 or 2 of those out every day. But now, with these markets accelerating in volatility like we've never seen before, both in stocks, gold, and even Treasury bonds and currencies, I'm going to be sending out somewhere between 6 and 10 of these each day for those of you that you do any intraday trading. They're not going to be micro trades. They're going to be trades that, last anywhere from a full day to 2 days to maybe, 30 minutes if they don't work. But they will be precise. You'll be able to understand the patterns. Your risk parameters, that'll be depending upon you. Frankly, you don't have to risk more than about $500 on almost anything that you trade here. So I think the 24/7 folks we're going to try it for a couple of weeks. And if it works good through August, I'm going to continue it through September, because September and October are great trading months. And, well, they're all great trading months, but sometimes we have great volatility. Remember, folks, they've increased the margin in silver, both silver margin now is $15,000 a contract, and the margin in the gold is $10,000 a contract. So as you trade those, you have to remember that you got those margin requirements have increased, and they have to increase them, folks, because when you're getting, $220 swing in gold in just a matter of 2 days, they have to protect themselves, and that's really, what they're doing when they're doing that. So let's give hats off to them, because they're trying to protect you. That's really what they're trying to do. Okay, a couple of real interesting charts. First of all, we had a question from one of our listeners about Mr. Warren Buffett himself, and evidently he has been kind enough to send out a giant warning about what he's looking at here, and his indicator is called the Buffett indicator, global market cap divided by global GDP, and it's up around 100. Supposedly that's some type of a warning sign. I don't know, but boys and girls, believe me, I've watched Mr. Buffett do games with these commodities and stocks for many years, especially stocks. My most memorable one was back in '96 with silver. He came on and said he owned 20% of the above ground silver in the world. The silver rallied $1.50, and that was from I think $13.50 up to $15. And the next 3 or 4 weeks, when the Berkshire Hathaway report came out, there was no silver in the portfolio at all. He had already sold it. So they have a tremendous affinity to using the markets. And believe me, when you're popular like that, you can be able to do that. That is, David White has just posted an absolute great quote from David White himself. He said, listen to any of the big men on Wall Street is like using your wife's attorney's boyfriend for your divorce. Very good, David. I have to agree with that one 100%. Okay, let's move on and cover a couple others that I think are relatively interesting. One here is from our good friend Rich Anderson. We'll bring this up here. Here's what we're looking at here. This comes from Sentiment Trader. And for the first time in history, yesterday, the NASDAQ was up more than 2%, while volume in the down stocks at the New York Stock Exchange were less than 50% of the total. That's really a really negative sign, folks. So whether that's negative enough, I don't know. Here's the other 6 times it's occurred. You can see that was all related to the dot-com bubble. And we certainly could be in an area like that, given all the stuff that's happening in the world with the COVID certificate of vaccination 19 and all the other stuff that's going on. So that's one. But here is one that is, if you like just simple things, and I certainly do. This is the New York Stock Exchange Index, folks. This is the broadest method of looking at stocks that you can get. And you can see here, yesterday we hit a exact 78% level here at 13,000. We closed at 19,740. So we did hit that number. Whether it means anything or not, I don't know, but nobody else does either. We'll be right back. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I want to take a look at the commodity markets today because we've had a really big, really nice report yesterday. We had that soybean oil that we sold. It backed off, went right down to pretty close to our exact fill price, had a really strong move here. And as you can see, it's starting to move up. In fact, the move that we had down here over the last 7 days was less than what we had during the June-July period. So that could be a very, very bullish scenario in the soybean oil. But let's take a look at corn because, believe it or not, corn has had a heck of a move here. In fact, I don't even have the correct high in as of yet. I'll show it to you in just a second here. But let's get this up here. I've got a little bit of a data problem, and I believe it's trading up here around 330 in the corn here this morning. Let me double check my other source here to make sure. Yep, well, we're up to 333. That's the biggest move we've had in corn since Hector was a pup, and that dog's near on about 12 years old. So this could be the beginning of a really nice move in the corn, folks. I had that beautiful bottom down there at that 320 level, and it held, and had the report yesterday, and away it goes. We're almost at the 60. Well, we're at the 61% retracement of the last move. So any move above this 339 level would really get corn moving in the right direction. So that one looks pretty good. Here is another one here that we've been watching very, very closely, and that is the little piggies, the August hogs. And they've also had a nice move here. We're starting to see some indications that the commodities are start moving. Folks, we've already talked about this many times, that we are going to see higher prices. Yesterday, I went to our favorite butcher shop here in Tucson, and I picked up a tri-tip, which I really like, over from my old days in California. But it was only about $2 more than I usually paid, and the butcher told me, get ready, he said, because it's getting harder and harder to get really good cuts of meat. And he said if this virus gets any worse at all, he said the price of this meat is going to get just extremely high, like double the price possibly, he said. So those are a few things that I think we ought to keep in mind. If you've got a big freezer, you might want to put some in there now, but here we don't eat that much meat, but when I do, I last about 3 days, and I've got a special recipe that I use. Let's take a look here at the soybeans. I wanted to the soybean meal actually held some really good support here, and I think we've got a chance here on the soybean meal to get this up here. Okay, Dan's saying I can go to CNBC. CNBC's on behind me, but I frankly don't care. I don't. The reason why I have to focus when I'm doing this show, I have to focus on what I'm trying to talk about. If I look at the live prices, it distracts me, and so that's why I try to do it that way, because I prepare these charts ahead of time. And that's best I can do. But we've made a double bottom here in the soybean meal. We're watching that very, very closely. That's another one that is interesting. And it's also had a really nice move here from that 286 level all the way up to 293. And that was a really nice, has had a nice move so far. So those are a few of the ones that we're looking at right here. Here's now one that is acting a little bit differently than the others. And let me get this up here. This is I think this is the coffee. This is what we want to be seeing. Yes, here we've hit the 382. Let's just write this support in here so we can see it. We've talked about this before, but let's take a look here at the coffee here. We'll get this up here. You'll be able to see here that we're right at that 382 level. We've been down here for 3 days now, and we're down 7 days from the high. So that 382 level has support. Anything below 112 in coffee is not a good sign, because you're down 7 days from the high, which was up at 128. You backed all the way to $16 a pound, all the way down to 112. If you go below 112, not good, because now you don't know where it's going to go. In fact, we've bounced just a day or two, so that 112 is really strong support. I would highly recommend you to be out of coffee if it gets below the 112 level. That's the main thing. Another one that's in the news, let's just get this up here because it's held up incredibly well, is the copper market. Let's just get this one up here so you folks can take a quick look at it, and I'll be right back with you in just a second here. And where did it go? Okay, hold it. Here we go. We're almost there. Just a second. Oh, no. What happened? Oh, shucks. All right, I got the chart. It is not marked as such. Let's get this up here, the copper, because it's got strong resistance up here, folks, at that $3 a pound level. We came all the way down to 275. We rallied up yesterday to 290. That was a 61% retracement of the high. We closed lower. That could be a negative sign because you had that 3-day rally and closing lower. Be careful. If you can get the copper above 295, it could have more legs in. But remember, folks, it took 2.5 weeks for it to go from $3 all the way down to 277, and that is not very much of a move in copper. So that's a sign of some strength coming in there. So you've got to respect this trend. But here again, on a shorter, let's just do the shorter term basis so you can quickly see what I'm talking about here. Load this up here a little bit. On the shorter term basis, you can see that. Let's get this up here. There we go. You'll see what I'm talking about. On the shorter term basis, you can see the ABCD pattern that completed yesterday at 290, you see, and that was a 61% retracement off the high. And also, now we're setting down, we're looking at a 135 pattern on the downside. So if we can hold the 283 level, then we've got a pretty good chance for the market to rally a little bit. That's what I'm talking about when you're looking at these shorter term patterns, because when you look at that daily chart, it's a little ominous, but when you get it down to a 60-minute or even a 15-minute chart, it's very doable as to see where the patterns are. But you can't do this. You can't do everything. So you got to find one or two that work and go with that. And the key to this, folks, pay very, very close attention to this, because the secret to good trading is what I'm going to tell you next. Don't take the losing trades. It's very, very important. Always pass on those. Only take the winning trades. It'll help your bottom line immensely. You'll be very pleased if you do that. All right, now let's take a look here at the cocoa, because it's had one heck of a run, and it's starting a little bit of a back off in here. Let's get this up here so we can take a quick look at it. And you're right, Mr. Z. Okay, let's take a look here. We cleared out the highs of May, and now we're starting to back off a little bit. Folks, watch cocoa. Really, I don't trade cocoa at all, but watch cocoa at a 382 retracement down there at 2350. If we get there, that's going to be one heck of a move. Look at the ABCD on the downside. I'm going to have to start trading it. 2100, right on the money, exactly 2100, and it rallies 5 handles. That's a heck of a move. And the margin on cocoa is, almost nothing compared to the others. We'll take a little break. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Charted Christmas wheat up here, the December wheat, and you'll notice that we are at really critical support here at 498. We're trading at around 499 right now. We've been here for 4 days. So if it goes below 493, it's certainly wrong, but we're at really major support here in the Christmas wheat. So pay close attention to that one if you trade the wheat market, because it's got a real chance. Remember, we tried it up here at 507. We gave it 4 cents. It didn't work. And now we're looking at it down here. So you don't have to risk more than about 4 or 5 cents on this one also, because it's got to hold this level at 494. Otherwise, it's going to be a little bit suspect. Let's switch gears here for a second and take a look at the stock market this morning. What we've done here, if you like Fibonacci numbers, you might like this one. This is the chart of the S&P, looking at it on a 5-minute basis from overnight. Yesterday we got up there to 33.83, I guess, 82.5. We came all the way down to 63.20 points. We rallied up to within a half a point of the 61% retracement today at 33.74. The number was 34.75, and now we backed off, and there should be some strong support here in the 63 level early in the morning. But as the market opens, we'll see how much of a goose it can get above here. Those be strong resistance, I believe, at 10 points higher at 33.78. So those are just a couple of the things that we're keeping an eye on with this early morning one this morning. This was the, I'll just show you the early morning forecast that we were looking for here. We did top up there near that time, and so we should be down if it's correct, and we don't know if it's correct or not, but that's what the overall forecast is looking at as we go through some of these things that we're watching here today. So let me get this out of the way, and I will talk to you. I've already covered the wheat. Now the next one I want to cover, hold on one second. This is one that we don't trade very often, but this is one that has got a lot of potential, folks. This is cotton, and we've got to thank our good friend Mr. Z and in the Tiger Den there, John, because he called that ABCD bottom at that 1.618 expansion. Cotton was trading at 49 cents, and now we've rallied all the way up, to 65 cents. You can see that's a 135 pattern, just absolutely nearly perfectly. And the first objective on this would be down here at around 59 cents. And pay close attention at 59 cents, folks, because that's going to be a 382 pullback. And if that can hold, you'd be looking at sharply higher cotton prices. Now, I know there's a lot of talk about the trade thing with China and stuff, but folks, I think we've learned our lesson. It's been going on for a couple of years. It's the same baloney. They give you one day is one thing, and they give you the next day is another thing, and they're both talking out of both sides of their mouth, both sides. So I trade what you see, not what you hear or think, because that'll get you in trouble. But the charts are there. If there's more selling, prices are going to go down. If there's more buying, prices are going to go up. And remember, the key, I stole that from Mr. Buffett, is don't take the losing trades, because he said that rule number 1 is don't lose money, and rule number 2 is don't violate rule number 1. So that's pretty much saying the same thing. But you have to take risks, and when you're wrong, get out. The person that gets out the fastest is probably going to be the one that does the best, because keep your losses nearly as small as you possibly can, because you can always re-enter. There's nothing mysterious about this stuff. If you want to re-enter, you can certainly do that. Now, we talked about the strong resistance in the Treasury bonds that we've had, if you remember. Let's just take a look now at the crude oil market, because we have the same thing going on here in the crude oil market. Let's just get this around here, and we'll be able to see it. By the way, folks, if you should happen to have a question and you'd like to call in to Mr. Al, 877-927-6648. Unfortunately, right now, the lines are absolutely swamped, but if you'll be patient, you might be able to squeeze you in. This is very similar to the Treasury bond market that we looked at 183, folks. You see that strong resistance there? It's a 1618 level, a 61% level. We haven't taken that out as of yet. We haven't gone down very much, but we haven't taken it out yet. If we look at this on a little bit of a smaller time frame, you're going to be surprised to see where we are. Let's get this up, and we will put in the price levels. So you'll see that we're not quite at the 78% level. Let me draw that in. That'll remove any doubt of where we are, and you'll be able to see that we are, we've hit there almost twice to absolute perfection, but this is still heading down in our opinion. And, right now we've had a little bit of a rally from August the 7th. We've made it up to the 78% level within 10 pips, and we hit it twice, and now we're starting to roll over what it looks like in the crude oil. Now, there's a lot of chatter on the internet about a big deal coming between Saudi Arabia and the United States about oil production and stuff like that. Folks, I don't follow news like that, but some people are really talking about it. My feeling on that is if something really big is happening, on the very, very bottom of that list that they call, like something is happening, is my name there, and I never get called. So they're not going to tell me. They're not going to tell anybody. They're going to keep it close to the vest. Now, if it doesn't work, they might tell you that it's going to work, but for heaven's sakes, we've seen this over and over again in these markets, how these things have a tendency to not follow along with what the rumor is saying, or whatever the trade of the day happens to be. Now, here, hold on, we might have a caller in. Hey, we do, from Victor from New Jersey. How are you, Victor?
Good. I see like a triple bottom on corn going back on a monthly chart all the way to like 2008 or 7. I want to know that. I just want to let you know, on my calendar, I marked down, one of your guys marked, this is a market high yesterday and today. We should be in a high for the year. One of your the guys that have come on the radio. Yeah. It looks like we're tapping out here. But check corn for me if I'm...
You're absolutely correct. It is a triple bottom in the corn down there at 220, and now we're trading at 234. So it's doing pretty good. So just hang in there. I think it's going to go higher.
Or go up now? Or what do we do normally when you have like a triple bottom going all the way back to like 2008?
It usually rallies, but we've already rallied 14 cents off the bottom. So buy a little 4 or 5 cent pullback, and then you can buy it. But right now it's a little too risky.
Question: is corn based on what the dollar does, or no?
No. Corn is for animal feed mostly, and ethanol, so has nothing to do with the dollar. Very little to do with the dollar, however.
And I heard their crops got wiped out by a lot of rain or something. I don't know. They're not talking about it.
They get hurt a little bit, but nothing. Don't worry about that.
You think it's a good buy here, corn, in the summer, 320?
Not at 320. Okay. I would buy it at 330, but not at 320.
Why you would buy it higher than lower? You're saying?
No, it's at 335 right now. So if it backs off a nickel, then I would buy it.
Okay. Can it go lower though? Can it drop? Of course. Something with China or something? Not buying corn or something?
It could easily drop, very easily.
Yeah, I never seen. All right, that sounds good.
Hey, thanks for calling in, Victor. We'll be right back with Mr. Z from Philly.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and I believe we have Mr. Z from Philadelphia on the line today. John, are you there?
I am, Larry. Thanks for taking the call and doing the show. And I wanted to ask you to speak to me about gold. Just by way of background, of course, it's no surprise. We all know gold is in a raging bull phase, begun, frankly, back at that August 2018 bottom down there, like 1160 or something. And we've had this 4-day drop. As far as 4 days are concerned, it's a pretty precipitous move, falling on the heels of the dramatic 3-week markup that preceded the high last Thursday. So, with all that as background, I don't have any questions on how to trade things. I figured that much out, but I'm wondering if there's anything that you look at, that you work with, that can shed some light on the question, is this decline that signals a top that lasts for a while, or alternatively, is this just an abrupt shakeout to shake the trees and shake the late bulls out prior to resuming going right back to higher highs? Anything your experience tells you that helps answer that question, please?
Yes, sir, John. It's yes, no, and maybe.
Excellent. Got it. Thank you.
Listen.
Thanks for taking the call.
Hey, listen, I posted a chart here, 15-minute, going back to the high at 2090. We dropped from 2090 all the way down to 1970, dropped $220 an ounce. The last time we dropped, and I'll just post this up so the folks can see it, the last time we dropped, you'll be able to see here that we dropped 240 points. So we dropped a little less than we did the last time. But the key, the first chart that I posted, which was, let me post it again because this is the one that I'm watching. This is how I try to find out to enter the gold, without risking an arm and a leg, and with a $11,000 margin now, it's not for the faint of heart. But you notice that we had a 382 retracement yesterday, came right in at that 1957 to 1961. I think Duffy called it exactly. I think it was Duffy said 1961 would be the high, and it certainly was. And we've been in a sideways move here. But look at the action last night, John. After that move from 1870 to $1990 move, we could only back to a 382, and then we tested again this morning at 1928. So that's showing this market's ready. It looks like it wants to go higher. So I think that I'd love to see a pullback down to 1904, and but whether we get that, I'm not sure. But the key level to watch is at 1850, because that would be equivalent to exactly what we did when we had that last big break of 240. We've dropped 220 this time, but that's close enough. When you're talking about something trading in the range of 22 grand, we could go. John, there's nothing bearish about these charts, silver and gold. These $200 moves, that's just to check. They're just checking the change pockets of the traders when they're doing that, because these are big moves.
I appreciate you highlighting that shakeout that occurred in mid-March, which was incredibly abrupt. And I always forget to do that, looking at the depths or the lengths of corrective moves compared to those corrective moves that have occurred just previously. You do that all the time. Thanks for re-highlighting that. Appreciate that.
Well, like I said, I don't know for sure, but right now, we've been going sideways now for, well over 8 hours, and have not broken down. Now, if this was really bearish, I would think that 382 level would have sent it down, below that 1900 level again, but it certainly hasn't done that. It's held that 382 at 1925, and so that's what I'm looking at. The key for me is if we get above 1961 with a lot of thrust, that tells us we're going to go at least back to 2010. That's the ABCD on that. And, when you get to 2010, you're only a heartbeat away from new highs. John, if we clear 2100, there's blue sky there, Bubba. You know that as well as I do. And it could be 3,500 before they let you play again,
Very good. Let me mention two things just before I part. Well, first, thank you to you. I'm intrigued by the timing of this abrupt pullback. Here we made the low Wednesday morning, yesterday morning at 12:30 a.m. New York time. We've got two things dead ahead of us. One is evidently U.S.-China trade update discussions between USTR Mr. Lighthizer and his Chinese counterparts. And going back 12, 18 months, there was very explicit talk on both sides that as part of trade dealings, a currency component is part of what they're talking about. And it's never been fully disclosed what it is they have in mind, but they're talking again the 15th. I think it's starting Friday afternoon into this weekend. I'm not quite sure, but I think that's what I read. Here's the other thing that I find absolutely fascinating, and that is this abrupt decline occurring just ahead of that. And recall, this weekend is the 49-year anniversary of President Nixon taking the United States or the dollar off or closing the gold window. I just can't help but thinking this reversal down in gold is setting the stage conceivably for something interesting out of the blue. So I just had to share that with you and your listeners. And secondly, I have to give a great big hat tip to Basil Chapman and former Denner Saratoga Bob, who was a very disciplined student of Basil's work. And that precipitous decline from the Monday high at 2061 into that low down at, 1872. I think that occurred Wednesday morning, 12:30 a.m. As I was, I in fact had alarms go off, and I was up at that ungodly hour and was observing the patented Basil Chapman 30-minute bar charts, in which the Chapman wave count gave a trough G, a recycled trough G, and it was Saratoga Bob who came up with a trading signal using the Chapman wave peak G, trough Gs as sell signals and buy signals, and that turned out to be at least the low for the past, 36 hours. So big hat tip to Basil and Saratoga Bob for inventing and utilizing those tools. I put those to work myself at that time, Wednesday morning at 1 a.m. or so. So thanks to them, and thank you to you.
Hey, listen, you have to hat tips off every day to Basil because he has some great stuff and the experience to prove it, too. So that's the main thing. Regarding those things about the currencies, John, they've told me what they're going to do, but unfortunately, I'm not able to share it with you. But
Very good. Okay.
I love you,
Bye
buddy.
now.
Take it easy and stay safe.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and just for remembering what we're looking at here in the Treasury bonds. I believe the Paul's asking, Postaman's asking if the Apple topped at the opening. I think that it has, but I believe I think we got to 59. Let's just get this up here and take a look and see what's going. Just follow the program here, because if it's not going to collapse, So watch it. The key time is 10:30. If we're making lower highs at 10:30, that's the trade of the day. And if it's making a new high at 10:30, that tells you exactly what you could be looking at. So those are just things that we're watching, folks. I mean, it doesn't mean anything. Now, what Mr. Z talked about with Nixon and the 49-year cycle, that's certainly possible, but a 49-year cycle is way past my pay grade. So I'll be watching, shorter term patterns to try to get in and not risk very much. That's the key. Remember, folks, when we were doing that gold and we were talking about the short trade in gold, that was trading at a 382 retracement up there at 2075 after the high was 2090, and you only had to risk about $5 there. And from there, it dropped, at $140. So, try to keep it as simple as possible and not risk very much, because these markets, you can be exposed to a great deal of risk when you're doing these things, because, they're increasing the margins now in commodities, especially the gold and the silver. Look at silver, 15,000. That's $3 an ounce each day. Well, we had a $4 swing the other day. So they're just trying to protect themselves and also protecting you. That's the key to what they're trying to do. Now, whether that helps or not, I don't know, but that's how they operate over there. That's for sure. Let's get a little method here to watch here. I think there's still strong support, resistance here in the S&P at this 3075 to 3080, 3375 to 3380 level. And I don't believe we're going to see 3,400, but I'm surprised often. But and I don't know where the top is coming. All I'm trying to do is to find a place where I say, okay, this is where we have a low risk. We'll see you all on the flip side tomorrow, folks. Live every day in an attitude of gratitude, and may God bless.